You cannot make this up. Just 7 days ago, crypto markets were showing signs of life. XRP moved up to around 1.67, giving holders a little hope, a little excitement, a little momentum, and now the price has been hovering around 1.40 for what feels like forever. Just when investors were starting to feel stable, new uncertainty entered the market again. Welcome back to We Are Cosmic, where we break down finance and cryptocurrency in a way that actually makes sense. If you care about crypto, XRP, Bitcoin regulation, and what global politics means for your portfolio, you are in the right place. Make sure you stay until the end, because what we are seeing right now could be part of something much bigger. Less than 20 minutes before this update, President Donald Trump announced new tariff measures, a fresh 10% global tariff order with plans to potentially raise it to 15% in the coming months. And here's where it gets interesting. This comes right after the Supreme Court of the United States had issues with previous tariff structures, calling parts of them illegal. So what does that mean? It means uncertainty. And markets do not like uncertainty. Whenever governments introduce new tariffs, especially global ones, investors begin to worry about trade wars, inflation, slower economic growth, and pressure on businesses. That fear spreads fast. Stocks react, crypto reacts, liquidity tightens, and even if prices don't crash immediately, momentum slows down. But here's the deeper question. Is crypto really in shambles right now? If you zoom in on the short-term chart, it feels frustrating. XRP pumped, then dropped. Bitcoin had red months. The rally that started after the November 2024 election cooled off. Everything feels boring, sideways, stuck. But if you zoom out, the picture changes. Markets move in cycles, always. In 2018, we saw months of pain. 5-6 red months in a row. People thought it was over. In 2019, the market came back strong. In 2014, we saw a long bottom. In 2022, the same pattern. Pain, consolidation, and then revival. History does not repeat exactly, but it often rhymes. So when you see headlines about tariffs, legal battles, and global tension, understand this. Short-term fear does not cancel long-term trends. Crypto has survived exchange collapses, lawsuits, bans, rate hikes, and global crises. And yet, here we are. Another important point, and this one is psychological. Even during price boredom, the community continues. XRP meetups, community nights in places like Denver, people wearing merch, talking about the future, building connections. Why does that matter? Because strong communities survive bear markets. Weak ones disappear. When price action slows down, it shakes out the weak hands, the impatient investors, the people who entered only for quick profits. What remains are long-term believers and strategic investors. Now let's talk about the bigger economic layer. Tariffs increase costs on imported goods. Higher costs can lead to inflation pressure. Inflation pressure can influence central bank policy. Central bank policy affects liquidity, and liquidity directly impacts crypto markets. It's all connected. But here's something powerful. Despite global uncertainty, crypto prices have not collapsed to zero. Not even close. That tells you there is underlying demand. There is structural support. Institutions are still watching. Retail is still participating. Builders are still building. Yes, the mega rally from late 2024 cooled down. That explosive momentum is not here right now, but consolidation after a rally is normal. Markets breathe. They expand and contract. The real question is not, why is price boring today? The real question is this a setup phase for the next expansion? And that's exactly what we are going to explore in the next part. We'll break down historical Bitcoin cycles, market bottoms, and whether 2025, 2026 could be positioning itself for another major move. Now let's zoom out and talk about something that most emotional investors ignore, historical cycles. When prices are red for weeks or even months, people start saying things like, it's over, crypto is dead, or we're going to zero. But if you've studied this market long enough, you know that this exact emotional phase has happened before. Not once, not twice, multiple times. Let's go back to 2014. After the massive 2013 rally, Bitcoin crashed and entered a long, painful consolidation. It took roughly 14 months to find a true bottom. 14 months of boredom, frustration, and disbelief. Most people quit. The media declared crypto finished. Then 2017 happened. Now look at 2018. After the incredible 2017 bull run, the market again collapsed. We saw months of red candles, month after month of pain. Confidence disappeared, retail investors vanished. But what happened in 2019? Recovery. Momentum returned. Fast forward to 2022, another brutal cycle. Inflation spikes, interest rates increase, liquidity tightens, major crypto companies collapse, fear dominates headlines. Yet by 2023, stability returned. By late 2024, we saw a powerful rally again, especially after the US election boosted market optimism. So what are we seeing now in 2025, 2026? We are seeing something that looks very familiar: consolidation after expansion. After the November 2024 rally, when optimism around regulation and political shifts fueled buying pressure, the market surged. But no market moves up forever in a straight line. The current phase feels boring because volatility has cooled. Price is holding levels instead of exploding upward, and boredom in markets is often a transition phase. Historically, after extended red months, when sentiment is low and retail interest drops, smart money starts accumulating quietly. They don't chase hype. They buy during consolidation. Let's focus specifically on Bitcoin for a moment. When Bitcoin prints several red months in a row, that has often signaled exhaustion. Sellers become tired, panic selling decreases, eventually supply tightens. That's when reversal setups begin forming. Now, does that mean we are guaranteed a comeback this summer? No market move is guaranteed, but the structure is not catastrophic. Prices are down from recent highs, yes, but we are not witnessing a collapse to zero. We are not seeing systemic breakdown across the entire ecosystem. Instead, we are seeing compression, and compression often leads to expansion. Another important factor is liquidity cycles. Crypto is heavily influenced by global liquidity. When central banks ease policy, markets expand. When they tighten, markets contract. Tariff announcements, like the recent ones from Donald Trump, create short-term fear, but they don't automatically erase multi-year adoption trends. Think about this logically. Are institutions suddenly abandoning crypto because of tariffs? No. Are developers stopping blockchain innovation? No. Are global payment systems shutting down XRP discussions? No. In fact, infrastructure continues to build quietly in the background. This is why experienced investors focus on structure, not noise. When you hear news like new global tariffs, your brain immediately thinks crisis, but markets price in expectations quickly. If the impact is manageable, volatility fades. Right now, the chart is telling us something important. XRP is holding, Bitcoin is holding, not exploding upward, but not collapsing either. That middle ground is uncomfortable because it offers no excitement. But historically, this phase separates disciplined investors from emotional traders. We also need to remember that previous cycle bottoms in 2014, 2018, and 2022 were followed by strong multi-year recoveries. If 2025 is playing out as a transitional year, then 2026 could become a significant momentum year. Cycles don't reward impatience. They reward positioning. So instead of asking, why isn't price moving? A better question is, are we in the accumulation phase before the next macro leg? Now let's talk about something that might be even more important than price charts: regulation. For years, one of the biggest problems in crypto has not been technology. It has not been adoption. It has not even been volatility. The biggest problem has been uncertainty. Governments were unclear. Agencies disagreed. Laws were outdated, and investors did not know what rules would apply tomorrow. That kind of environment slows capital down. Now we are hearing increasing discussion about the Clarity Act potentially moving forward. According to Brad Garlinghouse, there is an 80-90% likelihood that meaningful regulatory clarity could be passed by April. That is not a small statement. When the CEO of Ripple speaks about probability at that level, markets listen. Why? Because regulatory clarity removes fear. Let's break this down simply. When institutions want to invest billions into an asset class, they need legal certainty. Pension funds, hedge funds, banks, they cannot just gamble. They need to know, is this asset classified as a security, a commodity, a payment token? What compliance rules apply? For years, XRP specifically has been caught in that legal gray zone. Lawsuits created hesitation, headlines created doubt. Even if the technology was strong, uncertainty kept large capital cautious. If the Clarity Act passes and defines digital assets clearly, that changes the entire risk profile. Think about what happened in previous cycles when regulatory progress occurred. Every time legal uncertainty reduced, investor confidence increased. Confidence brings capital, capital brings momentum. Now combine this with what we discussed in part 2. We are already in a consolidation phase. Prices compressed, sentiment is mixed. If regulatory clarity hits during a compressed market structure, that can act like fuel on dry wood. But let's stay realistic. Even if clarity passes, markets don't instantly 10x overnight. What it does is open the door for structured growth. It allows financial advisors to recommend crypto products more comfortably. It allows companies to build without fear of sudden enforcement action. And that's powerful. Also consider this. Crypto adoption is not slowing globally. Even with tariffs announced by Donald Trump, blockchain innovation continues. Tariffs affect trade. They influence inflation and global economics, but they do not stop technological evolution. If anything, global tension sometimes accelerates interest in decentralized systems. Now let's talk about timing. Markets often move ahead of legislation. If investors believe clarity is coming, they may begin positioning before the official announcement. That creates anticipation rallies. We saw something similar in late 2024 after the election. Optimism about policy shifts triggered buying pressure. That was the mega rally phase. Now we are digesting those gains. So ask yourself this. Is this cooling period simply a reset before the next narrative? When the market rallied in November 2024, momentum was emotional and fast. What we are seeing now feels more structural, less hype, more positioning. And this is where long-term investors focus. Another important factor is how leaders like Michael Saylor continue expressing bullish long-term views on Bitcoin. When influential capital allocators remain confident, that supports narrative strength. Narratives matter in crypto. In 2017, the narrative was retail excitement. In 2021, it was institutional entry and DeFi. In this current cycle, the narrative could be regulatory clarity combined with institutional structure. If that happens, XRP and Bitcoin both benefit, but XRP may benefit uniquely due to its history with regulation. However, remember this, markets are forward-looking. If clarity gets delayed, volatility may return. If political disagreements slow legislation, we may see more sideways action. So patience becomes critical. Right now, we are at a crossroads. Tariffs bring short-term uncertainty. Regulation brings potential long-term confidence. The battle between fear and clarity is shaping this phase. Now that we've discussed cycles, price structure, and regulatory catalysts, it's time to talk about something just as important: human psychology. Crypto isn't just charts and laws. It's emotions, communities, and behavior. And often, these factors dictate who survives a cycle and who panics out. Take a look at XRP right now. Prices are stagnant. The hype from the mega rally after November 2024 has cooled. People are frustrated. Headlines scream about tariffs and legal uncertainty. It's natural to feel bored, anxious, or even doubtful. But here's the key. The community remains strong. XRP holders are meeting, networking, sharing ideas, and participating in events like the Community Night in Denver. People are still wearing merch, sharing stories, and supporting each other. Why does that matter? Because strong communities create resilience. They act as emotional anchors when prices swing wildly. They remind investors that crypto is more than short-term gains. It's a movement, an ecosystem, a long-term opportunity. When the market tests patience, communities reinforce commitment. This is where the concept of diamond hands comes in. Those who panic sell during consolidation rarely benefit from the next rally. Those who remain steady, who understand the cycles and maintain composure, often reap the rewards when the next momentum wave arrives. Think about previous cycles: 2014, 2015, 2018, 2019, 2022, 2023. Each time, patient holders survived the boring months and captured the explosive rebounds. Let's also address market boredom. Sideways action is frustrating. Prices are not going up. Media calls it dead or stagnant, but boredom is not a bad thing. It's the market taking a breather. It's a phase of accumulation. Smart money starts quietly building positions. Emotional traders leave. When the next catalyst hits, whether regulatory clarity, adoption news, or macroeconomic shifts, the stage is set for explosive moves. Another psychological layer is narrative reinforcement. People like Michael Saylor or Brad Garlinghouse providing bullish statements matter psychologically. Institutional confidence gives retail investors a sense of security. When community sentiment aligns with informed leadership, panic is reduced and positioning strengthens. This also explains why giveaways, community events, and online forums are not trivial. They keep people engaged, educated, and emotionally invested. They prevent capitulation during the boring sideways market. In other words, the strongest market movements are often preceded by the quiet, invisible work of community building. Here's a simple takeaway. Crypto markets reward patience, discipline, and engagement. Focusing solely on short-term price swings leads to stress and poor decisions. Engaging with a community, staying informed, and understanding cycles builds confidence. And confidence allows investors to act strategically rather than react emotionally. Finally, let's connect this to action. Community participation isn't just social, it's strategic. Those who are connected early have access to news, discussions, insights, and opportunities before the broader market. Whether it's joining Discord channels, Patreon communities, or live meetups, involvement strengthens both knowledge and conviction. Now let's get analytical. History doesn't predict the future perfectly, but it gives us a blueprint. By studying past cycles, we can make sense of the current crypto environment and figure out how to position ourselves strategically. Let's start with Bitcoin. Historically, Bitcoin experiences extended periods of consolidation after major rallies. Look at 2014-2015, Bitcoin fell hard after its 2013 bull run and stayed in a prolonged accumulation phase for about 14 months. Painful? Absolutely. Boring? Definitely. But it laid the groundwork for the explosive rally of 2016-2017. The same pattern repeated in 2018. After the 2017 bull market, Bitcoin and other cryptocurrencies suffered consecutive red months. Panic was everywhere. Headlines were filled with doom and gloom. And yet, by 2019, Bitcoin staged a major comeback. Those who understood the cycle and maintained patience benefited greatly. Fast forward to 2022-2023. Another cycle of red months, fear, and uncertainty. The market consolidated, absorbed selling pressure, and rebuilt liquidity. By late 2024, we witnessed a renewed rally fueled by optimism over policy shifts, adoption, and institutional entry. Now, as we look at 2025, 2026, what do we see? Another consolidation period. XRP has been stable around 1.40. Bitcoin has had several months of sideways movement and volatility feels low. But low volatility does not equal stagnation. It's the quiet before the next move. Here's the key takeaway. Cycles repeat not exactly, but rhythmically. Red months followed by accumulation often precede momentum phases. Market psychology follows predictable patterns. Fear drives selling. Patience drives positioning. And positioning leads to advantage when catalysts arrive. Speaking of catalysts, this is where regulation and adoption come into play. If the Clarity Act passes, that's a structural catalyst. If institutions increase allocation, that's a capital catalyst. If global payments expand and XRP adoption rises, that's a fundamental catalyst. Combine these with the natural cycle of consolidation ending, and the stage is set for significant market moves. Another historical insight, prior to major rallies, smart money quietly accumulates during periods of boring price action. You don't see massive headlines during accumulation. You don't see social media hype. That's exactly what's happening now. The market is building a foundation for the next expansion, even if most investors are frustrated by sideways action. Now let's translate that into actionable perspective. For long-term holders, this is the phase to strengthen positions. For strategic traders, this is the time to watch for early signs of breakout momentum. And for all investors, the lesson is patience. Emotional reactions during consolidation can be costly. Strategic positioning during quiet phases can be rewarding. Finally, let's consider market memory. Historical bottoms in 2014, 2018, and 2022 all had one thing in common: extended periods of red, then a strong reversal. If 2025-2026 follows a similar pattern, we could see a buildup toward a major momentum wave this year. It may not be instant, it may not be explosive immediately, but structurally, the ingredients for a significant move are present. Now that we've covered cycles, regulation, tariffs, and community psychology, it's time to connect all the dots and look ahead. 2026 is shaping up to be a year where preparation and strategy matter more than short-term hype. First, let's summarize the current environment. Crypto prices are in a consolidation phase. XRP is holding around 1.40. Bitcoin has been moving sideways, and volatility is low compared to previous explosive rallies. Headlines scream uncertainty, tariffs, legal battles, and regulatory discussions dominate the news, but underneath the surface, structural forces are quietly building. History tells us that consolidation after a rally is often followed by a momentum phase. The current boring phase is the accumulation stage. Regulation is a potential game changer. The Clarity Act, if passed, would provide legal certainty for digital assets. According to Brad Garlinghouse, the probability of this passing by April is high, around 80–90%. This clarity allows institutions to enter with confidence, reduces risk for investors, and opens doors for long-term adoption. Regulatory clarity often serves as a catalyst that shifts markets from consolidation to growth. Next, consider macroeconomic factors. Tariffs introduced by Donald Trump create short-term uncertainty, but history shows that markets adapt. Global trade and policy changes can temporarily affect liquidity and sentiment, yet they rarely stop technological adoption or structural progress in crypto. Investors who remain disciplined and watch cycles closely can often anticipate opportunities even during uncertainty. Community and psychology are equally crucial. Strong communities like the XRP Army create resilience. Diamond-handed investors, community engagement, and educational platforms provide emotional support and strategic insight. Those who engage intelligently during these quiet periods are better positioned when catalysts hit. Emotional discipline often separates successful investors from panicked sellers. Now let's talk strategy. For long-term holders, this is a prime time to strengthen positions without chasing short-term highs. For traders, monitor price compression for early breakout signals. Observe regulatory updates, adoption news, and macroeconomic shifts to anticipate momentum. Patience and informed positioning are key. Markets reward those who act with understanding rather than emotion. Finally, look at historical patterns. 2014, 2015, 2018, 2019, and 2022, 2023 all showed extended consolidation followed by explosive recovery. Each time, patient investors and smart money who accumulated quietly benefited greatly when momentum returned. 2026 could repeat this rhythm. The ingredients are in place: compressed prices, regulatory clarity on the horizon, institutional interest, and a strong community supporting adoption. So, what should you do right now? Stay informed, remain engaged, and position strategically. Participate in communities, follow credible updates, and avoid panic selling. Understand that short-term noise, tariffs, news headlines, and temporary volatility is normal. Focus on structure, cycles, and long-term catalysts. In conclusion, 2026 may be the quiet year before a major market chapter. Prices might feel stagnant, news may seem chaotic, and patience will be tested. But the combination of historical cycles, potential regulatory clarity, community strength, and adoption trends creates a foundation for opportunity. By staying informed and disciplined, you position yourself to benefit from the next wave of momentum. This is the path forward: strategic, informed, and confident. Remember, crypto is not just a market. It's a community, a technology, and a movement. Stay steady, stay curious, and stay cosmic.